Hey, what's going on, guys? Hope everyone is having a great night. Hope everyone's having a good weekend so far. I just wanted to jump on and kind of get the scan going a little bit early. I just wanted to vent a little bit and kind of share my thoughts of what I think is happening. Obviously, I do want to talk about some of the swings that we have set up, why I didn't add on Friday, and just kind of being patient, right? It's kind of the theme for the past 3 months or so. And really, I want to talk about SPY, guys. Clearly, Christmas is coming up. I hope you guys know that. So we have a very short week this week. If you guys are traveling to see family, I hope you guys are safe. But overall, I hope everyone just enjoys a little bit of time off and kind of decompress. I usually travel, so I will be taking a small day off essentially on Monday. But I am looking to trade, right? But really, during this time, I just like to focus on one chart that I'm going to be actively looking to trade, which is SPY. It's very simple, right? It's just one thing I have to focus on. I really just look at the daily and or weekly. If it looks good, I'll add it to the list. I'll wait for pre-market, and if it opens where I like or it breaks through levels, you guys get the point, right? I'll just kind of focus on this. But right, I do have some concern with SPY overall market. Really, we always talk about footprint candles, right? How important footprint candles are, and how this can be the start of one campaign or the end of another, right? And specifically at the bottom, right, we know that that's pressure coming in to either stop a selling campaign and a buying campaign starting, or we can now look for a trend to change and go to the upside, or if we're at highs and we see a footprint candle, right, in terms of volume, and like this is a big sign that sellers are now here, and the buying campaign has now come to an end, and a new selling campaign is beginning. And we kind of saw that here on Wednesday the 18th, which was FOMC, one of the biggest selling days I think I've ever seen. It's got to be up there. And then really, following that day on Thursday, relatively high volume again, but we had an inside bar that closed near the lows. And then Friday, obviously that big squeeze day, but it really didn't amount to much more than than what it felt like a massive day, right? It was a big day, but it still closed near the lows. Still technically within the Wednesday candle, which I obviously won't close anytime soon. But this was also, what was it, guys? I talk about these days a lot. This was an Opex, right? So this was a big calendar leap for a lot of people. If you go 3 years out, right, and people are looking to buy leaps, they're likely going to look at the Decembers and the Januaries, right? And if they got it in 2023, they're probably looking at 2024 Decembers, 2024 Januaries, right? So a lot of people that are looking to get leaps are buying into these contracts and holding them for the long term. Remember, these just expired on the 20th. Now, the next big one is January 17th. We'll talk about this here in a second. But yeah, I mean, this still closed, had a big day, but it still kind of closed near the lows from Thursday and Wednesday. And we talked about that there could be a potential trend change, right? We saw kind of this big distribution candle, a footprint candle. So really what I'm looking for here is a move back up through this imbalance bar, right? We have to consider this FOMC day, which is this big, once again, this Wednesday the 18th bar, an imbalance candle. Now, what is an imbalance candle? If you guys haven't been in here for a while, it's very simple, right? It's almost similar to a gap up or a gap down, right? Where we have a close and then we open higher, right, during the overnight session. And then what ends up happening, right? We end up having a very large gap where price closed and now open here. And this is an imbalance, right? It just happens overnight where there's no price action that happened between here and there. We end up opening higher, right? And there's a void down here. Now, what ends up happening during an imbalance candle that happens during the normal hour sessions, kind of the same thing, except just price moves so quickly through zones, orders are passed by. A lot of people may be asking, what does that mean? What does that mean when an order's passed by? Well, there's buyers that are putting orders right here. I'll just say they're this white line. What ends up happening is price moves so quickly down because of news, right? Remember, this is during when Powell was speaking, also whenever the report was actually released. Price just moves so quickly through. If there's 500,000 orders here, it may go through and chip away at 100,000, right? But 400,000 are still left up here, right? And it ends up moving down. And it's doing this from multiple spots, right? It's just kind of melting through a lot of these buy orders, maybe even sell orders, and it creates this void where it's basically not true price action, right? So what ends up happening with these imbalance candles is you can move back through them because some of those passive orders can still be there, right? So that white line that I was talking about, let's say somebody still has 400,000 orders looking to sell here or buy here. This can now move up to this spot, trade back up through the imbalance, and end up filling those orders, right, and then continue its trajectory back down. And it's literally the same exact thing for this here, right? There's a void here where I'm sure people were either looking to sell in this spot or now looking to buy into the gap, right? This can very easily move down into this this gap itself, fill those orders, and then start to continue its trend or whichever direction it wants. But it's the same exact thing. That's why I talk about these imbalance candles being very important during data days. So specifically like a CPI during FOMC, because that happens during the market session itself, during the cash session that is. So it's very, very important to kind of know what typically happens during these FOMC candles, especially ones as dramatic as this one. It will retrace back up through. But now to the point that I was making, right, that still gives us an opportunity to push up on low volume just to collect these orders is kind of like, okay, here, you guys can have this type situation, but it's not going to be looking to make a new high. If this starts to fizzle out on low volume, this could be our change of character, guys. Now, it could fizzle out here, which is this old high from 600, which is also a very big psych level, so that's very interesting. But it could just push up, test this old high, right, and then reject here, and then start to do what, right? Start to make its way back down. But it's important because now we have a change of character. We talk about this all the time. We were making higher lows, higher highs, higher lows, higher highs. We now have the opportunity off of this footprint candle to now push down, right? Push up on weak volume, have our first lower high, and then get a lower low under a very, very important gap here, right? This is, in my opinion, kind of our break of structure. If we break into this gap, it's not good, right? I mean, we still are trending very nicely. I don't think this chart becomes completely broken until we get under 565, but we do have undoubtedly a change of character, right? And we can start looking at shorts on lower highs or whatever you guys want to do. You guys can long off 576. That's also viable. I'm not taking that away from anybody, but undoubtedly a change of character and a pretty important break of structure underneath this 586. Now, I do want to talk about something. This may confuse some of you guys. It's okay, but you guys know, right? I've talked about this a lot, okay? And this is why I think the top could be in. So remember when I was talking a lot about Vana charm flow the last 4 weeks of the year? I hope everyone remembers that. Now, why is this important? Well, as I said, flows are most bullish the last 2 weeks of December due to the leap expiration into the end of the year, and that's being captured with that December 20th Opex for this year, right? And then the first 2 weeks of January to capture the beginning of the new year, and that's going to be with that leap expiration of January 17th. Now, typically during this whole 4-week period, most of these leap contracts, guys, are call side because people are primarily buying index leaps, right? Big hedge funds, buyers that are just out there, right? A lot of people are looking to buy 1 year out, 2 year out, 3 year out, and try to capture the annualized return that they can get on the indexes, right? And if you guys don't know, the average annualized return is roughly 9%. Over the past couple of years, it's actually been a little bit higher to about like 13% on average. But now you have to kind of think, guys, look at how far up we are this year, right? If we're just going to take it from the beginning of the new year, I'll take it from the close on the daily, so this is January 3rd, and take a look at where our high was. We're at about 28 to 30%, guys. That is way, way higher than 9 to 13%, which is the average return. This is a massive, massive up year, right? There's been a lot of major buying that's come in, specifically this August 5th, right? We've obviously seen some big volume back here in March of 2024, but this has been a massive rally. I don't think people would mind taking profits at this point, if I'm being completely honest. Now, you also have to think about one other thing, guys. We have to think about the election, right? A lot of people were kind of, I think, accumulating before the election results, but we have to think, maybe this election already priced in the end of year rally, and it was front ran well beforehand, and we've basically already experienced the end of the year rally. We've been in the end of year rally since August, right? Since August, we've been up around 19%. Actually, if we just take it from the low here, right around 19, yeah, 19 to 10%. That's a massive, massive move, right? We've had 2 major consolidations here with kind of a pullback into a gap, another big pop, pullback, right? Another big pop, kind of consolidation here. And now we saw our first decline rather than a mark back up. Now, this is where I also want to talk about the kind of how Vana and Charm play a role in this, right? Which I've explained to you guys multiple times, but I'll kind of briefly go over it. It's the sensitivity of deltas relative to time decay, right? So think about it. The longer that the longer that we consolidate without any movement, we see dramatic deterioration of put contracts, especially when we have less trading days kind of going into shorter weeks due to holidays, things like that. So this has been the case for puts being absolutely crushed because we kept grinding higher and higher and higher. So think about back here, right? Consolidation, we have somewhat of a drop, we end up ripping, right? Then we have a consolidation, we rip, right? We have consolidation, small drop, we rip, right? Then we drop it down, consolidation, then we rip, right? Same exact thing. But finally, we end up getting consolidation and a big, big drop. But you have to think though, right? If we look at these days here, a lot of people are kind of playing into the end of the year. This is like September, October, right? So the consolidation here is hurting all contracts specifically tied to the most VANA sensitive expirations, which is going to be that December 20th Opex and the January 17th. Now what ends up happening off of this consolidation is it hurts shorts even more because it goes to the upside, right? Then it kind of breaks back down, right? Gives people some hope. Then it rips even higher and makes a new high. Then it pulls down. Once again, we have consolidation, deteriorates some of those contracts. What does it do? It rips higher, right? Now we're kind of on the inverse side of all of this, guys. Instead of having these kind of VANA squeezes that we've been seeing, right? Now we have it consolidate at the highs, and it actually has one of its bigger volume breakdowns, right? So you have to think about this, right? The puts have been getting crushed. We've been going higher. Now people are bulled up to the max. Call side, everything kind of deteriorates as we kind of get closer to these expirations that have holidays kind of surrounding them, because obviously there's less trading time, so a lot of these moves are going to be completely deteriorated by the less trading days, right? It just makes sense. Now, if we end up having a slow grind up followed by another dramatic drop, or if we just kind of consolidate here, guys, it would be the same exact thing but inverse, right? Now a lot of these call contracts are losing a ton of value. They're being deteriorated going into the 0117 expiration, and then we're going to have big drops that are almost like Vanna squeezes to the downside because these contracts are losing so much value from a time decay perspective, but also a Vanna decay perspective, right? Where they're now losing a ton of value because of the deltas relative to time, right? If they're both not working in your favor, they lose a ton of value. What are people going to end up doing? They're going to close those, and then that ends up kind of dropping price because these do help lead the market, especially around these big OPEXs towards the end of the year, right? So it's very, very interesting kind of going into that final leap OPEX of 0117. It's crazy with how much bullish euphoria that we're seeing in the market with kind of these red flags that are out there in the market as of right now. So like I said, we could see a Vanna squeeze to the downside if enough decay ends up happening to these call sides prior to the expiration. That either happens by a slow grind up and a big drop once again into this gap. If we have another bar like this on Wednesday, December 18th, that could absolutely murder those, and we could see a very, very quick capitulation. Or if we consolidate, right, like I said, Vanna will start to decay these from a time perspective as well. And these contracts in the 0117s will lose a ton of value. We could see a capitulation happen that way just from a simple premium decay on those contracts. And like I said, man, a lot of people are expecting a rally. They're expecting an end of year rally without even thinking about like, hey, dude, we might already be in this one. This might have been priced in and kind of since August, man. This thing could have been priced in since August. It could have been priced in. There's a lot of opportunities where they could have accumulated and then had a drop to kind of get excess liquidity, and then it marks up, right? They could have accumulated again here. People haven't really thought about this, and a lot of people that I know personally, a lot of people that I see around here are extremely over leveraged. They're buying every dip. All they're doing really, and that's kind of their edge, is buying a pullback to the 9 EMA. There could be a huge bloodbath. And a lot of people are so basic. They think end of year rally. What is end of year for a lot of people, guys? I'm going to give you guys a moment to think about this. A lot of people are think end of year is just January, right? That's kind of what they're expecting. Oh, this has to happen by January. And naturally, what are people doing? They're buying the 0117 expiration, guys. People are piling into that OPEX. And maybe some people are going into the 0123. Nobody's really being protective and really looking to like June or further out. Everybody's trying to target the end of year rally with the January contracts. It can get really bad really quickly. And one thing I want to show on here as well is mags, right? So really, if you guys didn't know too, the entire rally this entire year has been primary function of the Mag 7. If we take a look at mags, which is just tracking the Mag 7, take a look at the volume here at the highs, right? And remember, I talk a lot about volume being like this high. You want to see for like a trend, or not a trend line, but like a resistance breakout. So right here for this new high, you want to see a high volume breakout and then a low volume pullback, kind of like the harmonic stuff that I've been teaching for a long time. When you end up having super high volume like this, with just consolidation, right, and a no new high being made, that's very, very concerning. That is like 100% signs of distribution. We take a look at some of the names as well, right? Most of them look pretty bad, right? Take a look at Google, right? It kind of broke underneath that 191.75 resistance. The weekly barely, actually closed underneath. This isn't a really good weekly looking chart now, right? This kind of looks like a sweep. If we look at the monthly's coming to an end here. This could be a monthly sweep over that high of 191, right? So that chart doesn't look the greatest. We take a look at Amazon. Amazon kind of like just consolidating here as well. If you take a look at the weekly, not the absolute worst. The monthly, not the absolute worst, right? So that's kind of just like neutral, if you will. Take a look here now. Let's take a look at Meta, right? Meta, brutal chart, right? Take a look at that daily. Kind of looks like it's about to slip all the way back down to like the 5. And I don't even know. This could come all the way back down to 542 unless it catches somewhere here. But this is not a good weekly chart. The monthly chart, absolutely brutal as well. That looks like it's going to sell off pretty bad. Obviously, earnings coming up January 29th, so we have, maybe a pullback down to like 542. Earnings could save it, but this name does not look good at all. Right? Let's keep going down the list. Microsoft, not a good look. Right? Kind of broke out through this potential lower high, could have turned into support, ended up kind of being a base on it above the weekly, but it closed back below. This monthly chart looks like a sweep above that spot, right? So Microsoft does not look good, right? Let's take a look at NVIDIA. I will say NVIDIA doesn't look the worst. It kind of comes down, in my opinion, to this spot here, right around 129 to 130. Kind of the same thing. It was our internal lower high. We ended up breaking out above that. We've retested it multiple times here. You'll see it when I go back to the daily, but this weekly bar retested it perfectly, and then it broke out above this kind of like weekly, monthly range, consolidated on it, obviously made a new high, and it's just been kind of hovering here for a long time. We finally started to slip under, but once again, buyers kind of wicked it off of that one. So it's not the worst, right? You guys can see it's just kind of slowly grinding its way up, and now it's just trying to hold on for dear life. I do think if it loses 129 and even this 126 low that I have marked here, I do think that this can come down and fill this 118 gap. This chart, I don't know, man, this thing has potential to vomit. It really does. So NVIDIA, we'll kind of toss it as neutral alongside Amazon. And then Tesla, guys, this is the liquid leader of the market. This is the leader of the market. It is retesting this old high back here, so I will give it that. So the daily, it is retesting and pulling back. I wouldn't say a controlled fashion. It's doing it in pretty high volume, right? So that's not necessarily the best. Pretty gross close here on Friday. Normally this would be an inverted hammer at the bottom. That's bullish if it's at the bottom of a downtrend. This is at the top of an uptrend, really. I guess you can consider it that. But not the best look on the daily. It is high volume. But that weekly look, guys, that is kind of sending red flags, right? So the liquid leader of the market does not look that good for the Mag 7. So that's like out of the 7, right, 5 don't look that good. So very, very interesting. Like I said, mags, dude, with how much volume is up here at the highs and it's not making a new high, it's kind of just pulling back. This looks like it could give that lower high look, right? And I'm just very, very, very scared of this 0117 expiration. I think that we could see, just like I said, right, some kind of push back up. If it already hasn't done it, right, this could be our lower high here, right? If we kind of take a look at the hourly, I feel like I'm talking a lot now, but let's go to the hourly. This is something to note as well. Remember, with these big kind of imbalance bars, you can almost pull a Fibonacci level off of this one. So if we pull from high to low, right, we almost tagged, where's our thing? We'll start from here at the low. Take a look, right? Literally from our imbalance candle, which is our FOMC day, to kind of like our bottom that was found at 577. This already kind of pushed up to the 618. So technically puts are discounted if we're trading from this imbalance candle here, right? Because a lot of people that are smart aren't going to just trade puts right off the open, right? What they're going to do is they're going to let price retrace back up. remember I said I was waiting for 600. I would have loved 600 to short this if we saw weakness into that, but you could have definitely pulled it off 595. It is discounted right from zero point 0.5 to 618, so this is a good discounted entry to get into puts. So this could flush beginning of next week, 100%. But like I said, I would like to just see this maybe grind a little bit higher from here, maybe hit 600, which is this old high here. I just want to see some kind of fizzle out, and then obviously a rejection off of that one, and then start to trend and make its way back down, break into the gap at 586, and then start to actually fill it or come to the full fulfillment of the gap here at 576.74. And then, like I said, from here, you can be a bull. You can, I don't know, wait to be a bear again. Maybe it pushes back up and hits the top of the gap and then sells even more and starts coming down and goes further and further. I don't know. I have no idea what happens here. I'll be 100% honest. But right now, this has the potential to have a change of character in a complete meltdown to 576. And I don't think people realize what's happening. It's a little scary, right? It's a little scary, especially given the sentiment, given the overall vibe of the market that this year-end rally is going to happen. And right, you got to think about this. It's not like deterring any of these other charts. I feel like, like I've said, Roblox and some of these ARKK names have relative strength. So it doesn't mean everything's going to sell, right? But the Mag 7 and a lot of the liquid leaders in the market are showing complete red flags, guys. And a lot of people are really over leveraged. A lot of people's trading skills have become so bad and so reliant on people's alerts, other people's fake ideologies of how the market works without really putting in the work of understanding like structure and price and volume and the things that really protect your account. And that's really why I wanted to make this video tonight. Like I'll be the first to admit when the market doesn't look good or that I'm kind of nervous for a lot of people. I hope everyone in here is fine, right? I think a lot of people have learned and a lot of people are cautious and a lot of people kind of have the three-prong system that I have, right? You don't just take an entry unless you have proper risk to your entry and then a target to kind of get the R multiples and then buying time behind it and ensuring the best thing that you can do is risk management, right, rather than your gains. If you just think about the money will come and go so quick, and I promise it will. But yeah, just seeing the sentiment, man, and how people are so caught up in this year-end rally now and you got to think, man, like a lot of us have been blessed enough, and like I've been, doing a good job of buying these kind of days, right? These pullbacks that are higher lows on the chart, right? This day here, remember, I think we caught this on QQQ, this pullback into the gap here, or this breakout pullback, right? I'm good at catching the higher lows when the risk is not as extreme as people like to think it is. Whereas where people are buying up here and shit like this, right? That's scary, man. Like, it is really scary how people love trading breakouts and they call it strength when that's not how it works. But yeah, that's all I'm going to cover really quickly. I'm going to edit this all together and try to piece it as well as I could. I had to talk a long time with like a dry throat, so like I had to take so many water breaks. So hopefully this comes out with a good edit. But yeah, guys, just be very careful. I think this is the time to be careful. Like I really do. I don't believe in the end of year rally now. I think if we do get a rally, it's going to be a lower high, if I'm being completely honest. I think this gap fills. So like 576 puts for like, I don't want to say June, but like March, or 100% of focus if we get like a weak pop. That's all I want to say. Be careful. I think we can have a Vana squeeze to the downside. I think that's complete opposite or the inverse of what we were seeing before, with put side contracts being deteriorated on these consolidations or these rips higher. It's the same. It's the opposite now. I think during these consolidations, the call side contracts are being deteriorated, and then we're having massive drops to absolutely capitulate them, a slow grind back up to give people hope, or maybe averaging into them, and then we consolidate. And it's the same exact pattern, guys. And I think we can have some kind of capitulation down to 576, and it's going to literally be exactly like this, right, with these highs. Maybe we get some kind of pullback, which is like this, right, which we're kind of seeing the snapback here. It's no different than this, right? If I inverse the chart, kind of looks familiar, right? Like, dude, oh man, I think I'm right, guys. Like, I really think I'm right. But anyways, I'm going to jump off. This is going to be like a 30-minute thing just on SPY. Tomorrow, I'll put out something for the Sunday scan, just kind of going over swings. But hopefully you guys watch this, because this is pretty much all I'm going to be hawking all of next week while I'm out of town. So appreciate you guys. Love you guys. Welcome to all the new people. I know I talk kind of quick. If you have any questions, feel free to ask me. I have a pretty extensive knowledge of the market. I've been doing this for a really long time at a very high level. So feel free to ask me any questions. I'd prefer, honestly, if you guys ask me in the general chat so I don't have to repeat if people have the same questions. But yeah, happy to have all you guys on board. I feel like I do this the right way, and I'm very authentic and I'm very transparent. So I'm very excited to get the new year going. I figured, I would stay around. I was going to stop doing this just because there's a bad perception of trading right now, right? Especially with all the Bitcoin and pumping numbers and crypto scammers. Like, I just kind of wanted to just trade on my own, but I think there's a lot of opportunity here. So I want to definitely stay around and try to guide as best I can. So with that being said, guys, I will see you guys likely on Tuesday. I'll go ahead and get the recording done tomorrow for the swings and things like that and other charts that still look good. And then I will see you guys on Tuesday.